Hi, I'm here with Patrick Skovran with Boston Private Mortgage, and he's my number one lender for bridge loans. And what I wanted to talk about today is a problem that I hear a lot where buyers call me and they say, I really want to buy a house, but all my equity, my down payment is tied up in the house that I own. How do I do that? And so I thought we'd jump on with Patrick and have us walk through a little bit of what those options are there. So, hey, Patrick.
Hey, Ruth. Thank you for having me on today. I really appreciate it. And hello to everyone out there. And yeah, we do run into this problem quite a bit. And here at Boston Private, we do have a very good solution for it. And we look at it a little more holistically. We want to do two things. We want to help our clients, as you noted, get the equity out of their house before selling it in order to use that for a down payment on a purchase. And then we want to help them with the ultimate purchase as well. As we discuss this, I may use terminology like departure residence and acquisition residence, because if I just say home too much, people tend to get confused on which one I'm talking about. There you go.
Sure, makes sense.
Any specific questions from there? Do you want me to kind of get started with this, or
Yeah, so I think it seems like over the years, there's been some people who I've referred to you or they've talked to various banks that do this. And that's the other thing I think for people to understand is that, sometimes you might call your main bank and they're like, no, we don't do that. So there are certain banks that do certain things. And so depending on your situation, like I always will refer to different lenders depending on what the needs are. So your bank seems to really, this is one of the things that you specialize in, correct?
Correct, it is. And traditionally, larger banks look at this, they look at it as if you have not sold the home you're going to, your departure residence, that you never will. So usually people in this situation run into two challenges. They need a down payment, and that's what the bridge loan does for them. But they also need to be able to buy their new home, their dream home, without being penalized because they haven't sold the other one yet. So what we do solves both of those problems. We provide our clients with a simple home equity line of credit to use as the bridge loan, air quotes there, and that gets the equity out of their departure residence to use on for the down payment on their purchase. And then we ask them to agree to sell the departure residence within typically a year. And if they, sign that agreement with us and a listing agreement with you, we're comfortable counting that property as if it's already sold. So we're able to qualify them for their maximum purchase price without penalizing them for the unsold departure residence. In a nutshell, that's our program.
Can they use, so if I value someone's home at $2 million and they have $1 million mortgage, can they use the whole $1 million, or how much of that do they have access to?
So anywhere from 70 to 80%. So they would get access to $700,000 to $800,000, depending on a few different factors. We'd be a little less inclined to go up to 80%, say on a Soma condo, than perhaps a single family residence. But the general rule of thumb is 70 to 80%.
Okay, and what happens, so speaking of the Soma condo, what happens if they can't sell it? Like what happens if it's not selling and then they already bought a property? Does that ever happen?
That is why we give some reasonable cushion and why we don't let them finance up to 100%, right? Mm-hmm. So 70 to 80% seems reasonable. We give them a year to sell the departure residence, which we feel is pretty generous, but they do need to sell it. They are agreeing to do that, and they do sign an addendum to their note agreeing to sell the departure residence within 12 months.
Got it. It seems like, and I really don't know the answer to this, that not everyone qualifies for this product. Like, what's the ideal client that would qualify, and what would exempt you from being able to have access to this?
The one thing we really look for is that they have a little bit of liquidity on their own, not an overwhelming amount. Obviously, if they had enough liquidity for the down payment, they wouldn't need to talk to us. But there is going to be a period of time in which they are carrying both properties, and we want to make sure they have at least enough liquidity to pay those two bills for, say, 6 to 12 months. So we do look for some personal liquidity going into it. Again, not enough that they wouldn't even need the program, but there does need to be a little bit there to make us all comfortable they can pay both mortgages during the time frame they're carrying both properties.
That makes sense. And true, honest, I don't know the answer to this. Sometimes I'm baiting you with questions that I know the answer to, but I don't know the answer to this. I actually recently took out a HELOC, home equity line of credit on my home because, when COVID happened, I was like, I don't know if I'll see a paycheck for a long time. I have a huge staff. I wanted to just, have some comfort in terms of being able to have some cash available, and while still being able to have cash available to do other things if, wanted to buy properties or something like that, if the market went down. If somebody has a HELOC already, could they just use the HELOC in the same way? It sounds like
Yes.
that's what's happening, right?
Our home equity line that we use for a bridge loan is very generic. There's nothing written into it that says you have to use it within a certain amount of time or for this certain purpose. They could change their mind after getting the equity line and then use that to remodel their house, their existing home, or whatever they might desire. I always joke around and say they could go to Vegas and put it all on black if they wanted to. Recommend it. But there is nothing in that equity line that defines what it has to be used for. It's written the same way most other equity lines are. The rate is prime plus 1%, which is pretty standard. And yeah, they can use it for anything.
So prime plus
they can use
1.
someone else's.
So what is prime plus 1 for us laymen? What is that number right now?
Prime rate is currently 3.25%. So the equity line today, if you were getting it, would be 4.25%. It's interest only, and you only pay for it once you use it, just like any other equity line.
Right. So basically, you have a credit card for $1 million, right? Unless you spend that credit card, you don't use it.
Correct.
And then, but that's available for you, when you find the home or are ready to purchase. And in which case, that's when the interest starts with whatever prime is at that time. And that floats around a lot or a little bit, that prime rate.
I would say a lot. It tends to be measured annually. Prime was very low all the way from 2008 till around 2016. 17, and that's when the Fed started gradually raising it. And then as soon as the pandemic came along, they completely went back to where they were before, which is where we are now. I don't see them raising prime rate in the next year.
I see. So if I locked in at 4.25, all right, it's not locked in. If I bought a house and I used that and it's 4.25, then my chance of over the next 6 months that going up to 5 or 6 or 7 is, you're saying, very low.
Yeah, I can't write a guarantee to anyone, but based on what's happening in the world, I do not see them raising that prime rate anytime soon, anytime in the foreseeable future.
Okay. Well, that's super helpful. And I'll just throw in there, another option that people have if they want to buy a home and they want to sell theirs without putting it on the market, is that, and this is not something that I particularly advocate, out of all of the homes that I sell, I'm trying to think if I've ever sold any this way, a couple, out of over 500 homes. But it is a conversation that I'm having more right now, especially with condo buyers who are not sure if they can get the numbers that make sense for them, right? So there is something that is available to us as real estate agents called like MLS coming soon. So we could take like a picture and do the marketing of a house and put it at, say, a buy me now price. If that's, say $2 million, that's the number that you want. So we're not doing any like weird low pricing, strategy. And then, we put it at that price. And then the people that we're seeing that are coming on this coming soon are very serious buyers and serious agents. Because actually, it's not that fun to go through coming soon. It's not syndicated to clients. And so it's actually very laborious for agents to go through and find these properties for their clients. And then there's not a ton of information in there. So the buyers that are going out, signing COVID forms, putting on a mask, sending their pre-approval to come look at this house are oftentimes really, really motivated. and they're real buyers. So, you know, that can be a way that we can, you know, maybe unstaged, clean up the house, get it out there, do some light marketing, see if you get your number, and then you get it, close, and go buy your other house. So it's like two different directions, because it's very scary. I mean, I talk to sellers about this all the time. They're like, wait, you want me to move out? And then like, where do I go? You know, it's like a lot of people like move into an Airbnb or, you know, I mean, Patrick, you just went through this yourself because I sold your house.
Yeah, exactly. You sold my house recently.
To a buyer.
Thank you.
Your wife is a realtor. Yes. Yeah. So that was really fun, but you had to move out, right? And then, you know, sell your house and then buy another one. Is that the process that you went through?
We moved out, staged, and then sold it, and have not yet bought in again. So we were waiting for
Got it.
a more opportune time. But I have kids, and I
Yeah.
understand why you might not want to do that. The COVID created some of the circumstances around that. Many people do not want to move without knowing where they're moving to. And of course, you also would be moving twice if you were planning on doing this in rapid succession. So if you have to have a school district, if you have to have a certain place where you're going to be near, say, family or friends, the idea of selling without knowing where you're going is kind of scary, to be honest. And we hope that this process, we look at it more of as a bridge process than actually a single loan, helps people do that. That's ultimately our goal, is to give them some cushion to sell the departure residence without it being regarded as a shackle holding them down from their next.
Awesome. Well, this was so helpful. You know, I think lending is definitely at one of its lowest points ever. So that's a bright spot in our current market. So I will include your name and all of your contact information for anybody who's thinking about bridge loans or any loans. Patrick also does other loans as well. And I've worked with him over the years for many, many years. And he's a fantastic lender, does a great job, highly recommend him. And if anybody else has any other questions about buying or selling, feel free to reach out to me. And Patrick, thank you so much for your time today. I really appreciate it.
Thank you for having me on today.
All right, take care.
I really appreciate it.
You're welcome. You bet.